Buffett and Munger, both serving as co-chairmen of Berkshire Hathaway, helm an investment powerhouse valued at over $600 billion. Over decades, they've delivered exceptional returns for investors, and their investment philosophies have been mimicked globally. But who truly reigns as the superior investor? Is it Buffett, known as the Oracle of Omaha, or Munger, the disciplined and profound thinker? Let's dive in and find out. Who holds the crown? Warren Buffett stands as one of the most successful investors in history. Since taking control of Berkshire Hathaway in 1965, the company's stock value has surged by over 2,000,000%. This translates to an astonishing growth, where an investor who put $1,000 into Berkshire Hathaway in 1965 would now boast a portfolio worth over $2 million. Hailing from Omaha, Nebraska, Buffett embarked on his investment journey at a remarkably young age. At just 11, he was already navigating the world of buying and selling stocks with his own money. By the age of 14, he had even made his first foray into real estate investment. During his college years, Buffett pursued economics at Columbia University, where he had the privilege of learning from the legendary investor Benjamin Graham. Post-graduation, Buffett joined forces with Graham at the investment firm Graham-Newman Corporation. However, in 1956, Buffett decided to carve his own path, establishing his investment firm Buffett Partnership Limited. Now Buffett's mantra? Value investing. Buffett's investment style revolves around seeking out undervalued gems in the market. He firmly believes that companies boasting strong competitive advantages and robust management teams are the optimal long-term investments. Warren Buffett's investment strategy is a carefully crafted symphony of fundamental analysis. This involves an in-depth study of companies' financials, its industry dynamics, and the competitive landscape. What's intriguing is how Buffett blends this analytical approach with his own judgment and experience to make crucial investment decisions, carrying the weight of significant responsibility with each move. What truly sets Buffett apart is his commitment to the long game. Unlike many investors who succumb to market pressures, Buffett holds on to the investments for the extended haul, capitalizing on the prolonged growth potential of his chosen companies. It's a testament to his steadfast resolve and a fascinating study in navigating market fluctuations. Now, let's talk returns. Buffett's portfolio boasts stars like Apple, Coca-Cola, and American Express, contributing to a phenomenal 61% return over the last 3 years and an impressive 66% gain over the past 5 years. These numbers underscore his investment acumen and the success of his chosen strategies. And then there's the staggering net worth figures. As of November 2023, Buffett's wealth soared to an astonishing $118 billion, securing his position among the world's wealthiest individuals. But cast your mind back to 1965, a pivotal year when Buffett acquired Berkshire Hathaway, a struggling textile company. Transforming it into an investment powerhouse, Buffett steered Berkshire Hathaway to become one of the most esteemed companies globally. However, this transformation wasn't a solitary feat. Enter Buffett's trusted confidant and right-hand man, Charlie Munger. Their paths intertwined in 1959 through a shared acquaintance, igniting a partnership founded on mutual respect and congruent principles. Buffett and Munger struck a chord almost instantly. Munger's expansive knowledge, razor-sharp wit, and unique investment approach, drawing wisdom from diverse disciplines, captivated Buffett from the onset. Munger, also an Omaha native who worked in Buffett's grandfather's grocery store during his teens, helmed his own investment firm from 1962 to 1975, boasting an impressive solo average return of 19.8%. In 1978, Munger officially joined forces with Buffett at Berkshire Hathaway, marking the formal collaboration of two brilliant minds. Assuming the role of vice chairman, Munger became Buffett's trusted ally, a sounding board for ideas, and an intellectual sparring partner. While Buffett's name often graces the headlines, it's crucial to acknowledge Munger's profound influence. His fingerprints are undeniably etched on the investment philosophy and decision-making process at Berkshire Hathaway. Charlie Munger, though perhaps not as prominently visible as Buffett, commands equal respect within investment circles, owing to his intellectual rigor and expansive knowledge base. Munger's professional journey traces back to his legal training before transitioning seamlessly into real estate and eventually finding his forte in investment management. His reservoir of wisdom transcends the confines of finance, drawing insights from diverse disciplines, an attribute that profoundly shaped Buffett's investment approach. Unlike the allure of a cigar butt strategy, picking up discarded remnants with a few puffs left, often associated with cheaper but poorer quality companies, Munger championed a paradigm shift in Buffett's philosophy. His belief? Quality over quantity. Munger advocated for investing in high-caliber companies, even if they came at a higher price. challenging the conventional notion of seeking the cheapest options. It's akin to owning a profitable toll bridge, a solid, sustained income stream where you can simply sit back and collect money. Munger's sharp vision propagates the strategy of delving deep into business knowledge. His mantra is clear. In the long run, a concentrated portfolio reaps superior benefits compared to one overly diversified. Patience, according to Munger, emerges as the cornerstone of investment success. The real money isn't made in the hustle of buying or selling, it's in the art of waiting. Reinvested returns, he contends, holds the potential for exponential growth over time. Under Munger's tutelage, Buffett underwent a transformation in perspective. He began placing greater emphasis on the fundamental quality of business and their enduring capacity to yield consistent earnings. This pivot manifested in Berkshire Hathaway's triumphs, notably Coca-Cola and See's Candies, which proved to be veritable cash cows for the company, underlying the potency of their new approach. Throughout his illustrious career as an investor, Munger amassed substantial wealth, a testament to his triumphs in the investment sphere. His stock portfolio boasts esteemed names like Bank of America Corp., Wells Fargo & Company, and U.S. Bank Corp. Forbes estimated Charlie Munger's net worth to exceed $2 billion in 2023. But the story doesn't end there. Over the decades, the dynamic duo of Buffett and Munger orchestrated a remarkable metamorphosis of Berkshire Hathaway. What was once a struggling textile company blossomed into an investing juggernaut, boasting a diverse portfolio of business and investments. Their collaborative investment strategy, a fusion of their distinct ideas, consistently outperformed the market, solidifying their status among the most successful investors in history. Together, Warren Buffett and Charlie Munger form an unparalleled synergy, a convergence of two brilliant investment minds. As we plunge deeper into the intricacies of their partnership, we'll uncover how Munger's influence played a pivotal role in refining and evolving Buffett's investing approach, etching their legacy into the hallowed pages of investment history. Despite their aligned philosophies, Buffett and Munger are distinct entities in the investing realm. One of the primary differentiators lies in their risk perspectives. Warren Buffett's risk approach centers on the concept of margin of safety. This entails the pursuit of investments at a substantial discount to their intrinsic value, minimizing the risk of enduring capital loss. For Buffett, the bedrock of his investment philosophy is the preservation of capital and the avoidance of permanent losses, steering clear of unnecessary risks. On the other hand, Charlie Munger echoes the significance of sidestepping permanent capital loss and actively seeking investments with a margin of safety. However, Munger's approach delves deeper into a multidisciplinary analysis of potential risks. He hones in on a business with robust fundamentals and competitive advantages, infusing an extra layer of scrutiny into his risk assessment. So while Buffett is renowned for his affinity for stable and predictable businesses, Munger showcases a willingness to explore companies with growth potential. In terms of results, both investors have achieved extraordinary success. But now the million-dollar question arises: who between the two is the superior investor? Answering this question isn't a straightforward task. Are we measuring greatness in terms of strategy, returns, or vision? It's a multifaceted inquiry. Undeniably, part of Buffett's success is intrinsically tied to Berkshire Hathaway, a feat that wouldn't have been accomplished without Munger's methodical participation. However, when it comes to sheer wealth, Buffett emerges as a clear victor. Warren Buffett secures his position as the fourth richest person globally, with a net worth that surged by nearly $600 million to an estimated $123 billion. On the other end of the spectrum, but with a far from negligible wealth of $2.7 billion, is his partner, Charlie Munger. And when it comes to influence, Warren Buffett is a name everyone recognizes. On the flip side, Munger, while less prominent in the public eye, has made substantial contributions to Buffett's investment philosophy. So, who truly claims the crown of superior investor? The answer hinges on how we define better. If it's measured by the investor who's yielded the highest returns, then Buffett emerges as the triumphant figure. However, when viewed through the lens of influence on the financial landscape, both Buffett and Munger secure a place in the winner's circle. But what's your take on this? Do you think it's a fair contest? Drop your comment below to share your perspective on who you believe stands as the superior investor, Buffett or Munger. Before you go, don't forget to hit that like button and subscribe to our channel for more.